Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 31st, 2024, and we're diving into Intel's recently released third quarter earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Intel's performance and strategic direction.
Intel has reported a third quarter revenue of $13.3 billion. Can you give us a brief overview of the report?
Certainly, Intel's Q3 2024 results show a revenue of $13.3 billion, which is a 6% decline from the same quarter last year. The company is facing significant restructuring and impairment charges, impacting their GAAP EPS, which stands at a loss of $3.88 per share. However, on a non-GAAP basis, the EPS is a loss of 46, reflecting the adjustments for these charges.
Revenue and profitability overview. Let's start with the top line. Intel reported a net revenue of $13.3 billion for Q3 2024, which is a 6% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decline in revenue is primarily due to a decrease in the Client Computing Group and Intel Foundry revenues. However, Intel is making significant progress on its $10 billion cost reduction plan, which is expected to enhance profitability by 2025. The restructuring and impairment charges have heavily impacted their GAAP EPS, but these are strategic moves to streamline operations and focus on core areas.
And what about their profitability metrics?
The gross margin has significantly dropped to 15% on a GAAP basis, down from 42.5% last year. This is largely due to the restructuring and impairment charges. On a non-GAAP basis, the gross margin is 18%, reflecting the adjustments for these charges. The company is focusing on operational efficiencies to improve these margins in the future.
Operational efficiencies and future outlook. Intel CEO Pat Gelsinger mentioned the company's efforts to position itself for sustainable value creation. What are the key operational changes Intel is implementing?
Intel is focusing on simplifying its portfolio and improving organizational efficiency. The company is restructuring to align with its internal foundry model, which is expected to drive greater transparency and accountability. Additionally, Intel is making strides with its Intel 18A process, which is attracting strong interest from foundry customers, indicating a positive future outlook.
Looking ahead, what does Intel's guidance for the fourth quarter suggest?
Intel is forecasting Q4 revenue between $13.3 billion and $14.3 billion. The GAAP EPS is expected to be a loss of 24 cents, while the non-GAAP EPS is projected at 0.12. This guidance reflects the company's confidence in its strategic initiatives and the underlying improvements in its business operations.
Strategic initiatives and product highlights. Intel has announced several strategic initiatives and product launches. Can you elaborate on these?
Intel is actively working on strengthening its x86 ecosystem by forming the x86 Ecosystem Advisory Group with industry leaders like AMD, Google, and Microsoft. This initiative aims to simplify software development and ensure interoperability. On the product front, Intel is leading the AI PC category, with plans to ship over 100 million AI PCs by 2025. The new Intel Xeon processors have doubled the performance of the previous generation, enhancing AI acceleration capabilities.
And what about Intel Foundry's future?
Intel plans to establish Intel Foundry as an independent subsidiary, which will provide clearer separation for external foundry customers and suppliers. This move is expected to optimize the capital structure and offer flexibility in sourcing funding, positioning Intel Foundry for future growth.
Risks and challenges. Despite the strategic initiatives, Intel faces several challenges. What are the key risks highlighted in the report?
Intel's restructuring and impairment charges are significant, totaling $15.9 billion, which have heavily impacted their profitability. The gross margin has declined by 27.5 percentage points, reflecting these charges. Additionally, Intel's debt stands at $46.5 billion, which is a concern given the current macroeconomic conditions. The company needs to manage these risks effectively to ensure long-term sustainability.
How is Intel addressing these challenges?
Intel is focusing on cost-cutting measures and operational efficiencies to mitigate these risks. The company is also leveraging its strategic partnerships and product innovations to drive growth and improve its financial position. However, the competitive pressure and high debt levels remain key challenges that Intel needs to navigate carefully.
Key takeaways. In summary, Intel's Q3 2024 results reflect both challenges and opportunities. The company is making significant strides in its strategic initiatives, but it faces headwinds from restructuring charges and competitive pressures. John, any final thoughts on Intel's investment prospects?
Intel's focus on cost-cutting and strategic realignment is promising, but investors should be cautious of the high debt and competitive landscape. The progress with Intel 18A and the AI PC market are positive indicators for future growth. Overall, Intel remains a key player in the semiconductor industry, but careful monitoring of its financial health and strategic execution is essential.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Intel's performance in the comments below. Until next time.